Ask the right questions.
Mhm.
Make sure you're making your profit going in. Know what it is to make your profit going in. Not thinking that, oh, I can make a profit on this, but most all the educators now are teaching you how to push something to make a profit, but you have got to make your profit going in.
Welcome back, passionate investing community. Today, I have a treat for you. I'm going to interview Peggy Beauregard of the Nest Egg Builders, and she's wrote an awesome new book called Build Your Nest Egg. And we're going to spend most of the next hour talking about this awesome new book. So, welcome to the show, Peggy.
Thank you so much. It's always a pleasure being with you and talking to you and having you on our show also.
Likewise. And I do love your show, by the way. Definitely, I think we're going to get back into that later on, but I definitely want to lead off with a book. What really led you to write Build
Mm.
Your Nest Egg?
Well, my parents never talked to me about money, and I don't have kids to talk to about it. But by the time I finally figured out money, I actually lost the time value of money. And there's people that would like to be investors, and they just don't know the questions to ask or who they can trust. And I thought, what we really need is we need America to actually understand just the basics of money and how money works. So I said, and there's millions of people, right? There's the 3%ers, which are the people that have money, make more money, run their businesses, et cetera. And then there's the rest of the world, just the US, because I only do English, American English. And I just thought, if they had the basics of money, they could at least start saving, planning, doing better plans. And this is also written for parents to read to their children at the age of starting at 3 because kids are sponges when they're young like that. I saw that eyebrow go up. Uh,
Oh, yeah, absolutely. And I wanted to go find a passage from the book. Here you go. This is what you got at chapter 3. Take control of your life and your money. And I
mhm.
want to say the illustrations here are also really awesome. You got at least one illustration per chapter at the front of each chapter and some others as well, some diagrams. But I just love that idea of getting together with a family and reading it. And yes, you do have a lot, I think, that's very simple that could be for younger people, but obviously not limited to younger people. We could all, I think, learn a lot from what you've got in here. So why do you think so many parents avoid the topics of money and investing?
Two reasons. One is nobody taught them. So how are they supposed to know how to teach their children? That's the major one. And the other is, and part of that is their parents never talked about money. So they just think that's the right thing to do. And they think it's private. And I guess, I don't know. The other is maybe, I don't want to say they're embarrassed. I think that they think that children don't understand and that they'll tell them sometime later in life. And yet they haven't created good habits to begin with because they didn't start talking to them about money. So I don't want to say they're embarrassed, but maybe they're embarrassed. Some people might be embarrassed. I don't think so, though. I mean, people that work, we'll just take the resort world. The people that work in the resort world work their tushes off for, people that stay in hotels. There's all the people that cook and clean and work on the landscaping and make the place gorgeous. And yet they are probably the worst paid people and have to go sometimes to 2 to 3 different jobs just to make ends meet. And then how do you have them explain money when they're so busy they don't even really have time for their kids, which is too bad.
Yeah, very good. And I have to say, I love the wit and perspectives you offer. So on page 75, you pose the question, is your stock advisor doing better than you? Right?
Oh, yeah.
Right. Or as I've heard it said before, where are the customers' yachts? Right?
Yep.
All the financial managers, they have yachts. Hey, that financial manager, but where are the customers' yachts? I don't know.
What wasn't there a movie called oh, I can't remember the name of it. I can't remember Will's last name, but he did that, the cubics. He could put the cubics together in about 3 minutes, and he wanted to be a stockbroker. And it was
Mhm.
something about happiness was in the title of the movie. yet he didn't have
Yeah.
anything, right? They were living in a shelter at night, right? He and his son.
Yeah.
And but he had the right attitude. And one of my neighbors, I've watched him grow up for most of his life, and he knew I wasn't interested in stock, but his job is to go meet people and start building relationships, and he has zero. He has $0, and yet he's supposed to come into a company and get new customers to come in and then invest through him. Would I want to have him be my stockbroker? No, I wouldn't. He's a nice young man. He hasn't built a portfolio, right? Until he
Right.
actually builds a
Makes sense.
portfolio and sees how it works, how can he tell someone what he could do for them?
Yeah, very true. And the people you want to look for, obviously, are those that have been through a few market cycles, who have taken their licks, who learned their lessons, and hopefully came back a whole lot stronger.
Yes, we all take our licks.
Yeah,
It
absolutely
doesn't
true.
matter what field you're in, whether you run a business or your stock, your real estate, something usually happens somewhere along the line where you get a lesson. No matter what,
Yeah,
even though we teach people how to do their due diligence, we just never know. And usually it's the sponsor that messes things up, as we all know, right?
yeah, absolutely true.
Yeah. I mean, I'm sure, I don't know if you've
Before
had,
we dig too deep into that one,
oh, let's
don't want to
not.
dig a hole. I'm
I think
kidding.
you talk about that in your book, this last book you put out.
I do. Yeah, obviously the sponsor is the most important piece of the puzzle. And yep, this is my book here. Of course, it's also the name of the podcast, so I probably don't need to hold that open too long.
Yeah, well, people couldn't read it.
Let's resume. Okay, well, so many in the money investing world seem to divide themselves into two camps, which I call the Daves and the Roberts. Of course, I'm talking about the followers of Dave Ramsey and Robert Kiyosaki.
Hmm.
But one of the things that I like the most about your book is how you successfully bridge the gap between the two. So you've got all these basic money tips, budgeting tips, all these sort of things that kind of help you get out of debt and really get to square one where you're ready to be an investor. But you also speak a lot to people who are already to be investors or maybe already investing. And I don't like to know what do you think about that? What should we be divided into two camps, or is there a better way to bridge the two?
I think we are divided into two camps, and there's the camp of those who are not going to put up with it anymore, even though they didn't get the stories growing up. But you almost hear almost everybody say, they were brought up in a family where they didn't learn about money, and their parents did struggle, and they said, I'm not putting up with that. I'm going to go make it. And some of them fall down and go boom, and they pick up their bootstraps and move forward. And then there's the people that didn't do their due diligence. I've spoken to several doctors, and they didn't do their due diligence because they didn't learn what questions to ask. They invested and they lost their money, and they just said they're never going to do it again. So there's
Yeah,
really three categories. And then there's the third category of the people that would like to invest and they haven't put a plan together and they're having a struggle saving because they're living hand to mouth and they really don't know how to put a plan together. And me, I think it's really important you get a financial advisor no matter what your situation is so that you can have a plan put together. A good financial advisor will help you pay your way first because
I
no
love
matter
that.
what, you find we all spend money where we probably didn't have to.
Oh, tell me about it. Yeah. I mean, like I advise people, go take a look through your closet, your basement if you have one. If not, take a look through the garage and look at all those things that you just had to have. And then many cases didn't use it again.
And here's the other way, which I think I actually put in the book is, oh, I think it's in my course. Look at what you have automatic payments on,
Yes.
like all those renewals that come up every year.
Hmm.
Make a list of them and see, do you really need them? And then take that money and put it in a savings account. And then if you're a
Yeah,
smoker,
100%.
stop smoking and put that money. You stop smoking
Oh,
and
that'd be the
now
first thing to stop.
well, yeah, for
Yeah,
health
smoking, soda pop, anything you do every day that isn't good for you. So then, what about you? Do you still have somebody that you trust as a mentor in the financial space?
I have several.
Hmm. Good, good, good. And now, how do you vet your mentors? Or I don't know if these are paid mentors or just people who you respect in the financial space. But I guess, how do you vet them? I'd like to know somebody at your level, but then also maybe if you had advice, if it's different for somebody who's just starting out.
So for myself to invest, I run background checks on people before
Mm,
I invest on them. I do a
yeah.
real background check. I've actually had some people who just sent me their background checks so I could look
Mm,
at them because I let them know I need that. And I've had doctors just give me everything. It's been really wonderful. And
mhm.
the other thing is to have the interview. I want to meet the team, as much of the team as I can. Sometimes that doesn't always happen. But my biggest concern right now on meeting a new team is, because of the environment we've been in for the last 3 or 4 years, is do you have anybody that lost somebody's money that is on your team, and why are they on your team? Because a lot of people will, that's what they'll do. They'll go in again. I know maybe they understand they lost somebody's money, but they still want to be in the business. But what did they do wrong? And why is somebody that's really experienced taking them on? I really want to know that.
That's very true, but not always something that comes out from a background check. So at this point, you're
No,
just, yeah, so you're quizzing them, and probably, I would hope, also quizzing some people who have invested with them. Of course, they're not going to give you those references. If you ask for references, these are only going to be from the best deals they ever had.
yeah, and I think references are super important. I always say
Yeah.
ask for two, ask for somebody that's investing with you now and somebody
Mhm.
that is no longer investing with you. And there could be reasons. I mean, we have one of the fellows that comes on our show every week. He was investing with one of our sponsors, one of the sponsors we work with, and he said he made so much money from them that he's now doing it on his own. Now, is that the greatest kind of boost you want to hear if you're
Yeah,
the
love it.
sponsor, that they made so much money they could do it on their own? And as a matter of fact, I'm actually going to do my first investment with him. And I've known him for, I don't know, I think he's been coming on our show for three or 4 years.
Love
So
it. Love it.
yeah,
So
like
you do give a lot of advanced financial advice in your book. You talk about things like self-directed IRAs,
hmm,
infinite banking. So I'd like to know, how are you using these sorts of things in your own personal investing?
well, I do everything I can out of my Roth.
Yes,
My
good,
Roth
good.
self-directed IRA, I set that up years ago. I didn't know that I should never have set up a traditional because nobody talked about that. And the Roth was there at the same time. Like that's all they talked about. Oh, you need those tax breaks. Well, when I first started, I was putting $2,000 in. That was the most you could put in a year. Now, what
Yeah.
kind of tax break did I really get on $2,000? So one of the questions I say is you have a conversation with your tax advisor and say, how many dollars exactly do I get if I use a traditional or a 401k
Right.
traditional as opposed to the 401k Roth or the self-directed Roth account? And I bet you would find, and then do the
Mhm.
math, because the math is really important. We're talking about whatever you call it, of 72, how you double your money
Right.
in a certain length of time. So if you're getting, let's say, $35 off your taxes, but you're able to make 20% a year on your money, and you're now going to owe taxes on the 20% for the $35 you got, you really have to really take the time and do that. If you don't know how to do the math, then you pick up the phone and call someone like me or your whoever your advisor is and say,
Right.
look, I need to know the math. Look, your tax advisor should do that for you. You can
Right.
say, look, I'm getting $35, so do the math for me and tell me why I should do this in a traditional instead of a Roth.
Yes, for me, I do everything in Roth because I figure, look, if you're young, certainly it won't be long before you're doing far better in the Roth. And even if you're older, your kids can do very well with that Roth. You can pass that on. And I believe even currently, they get another 10 years
Oh, yeah.
after we leave the scene. So, it's hard for me to think of a situation in which I feel I would really want to go with the traditional. And I love the quantitative approach too. Yeah, people should model it out. I know a lot of people have the approach and they say, well, you may be in a lower tax bracket when you retire. And I'm thinking, well, no, not if you're doing it right. Particularly
Exactly.
when you're young, you're probably not making nearly as much money as you'll make towards your middle age and beyond. And so, 100%, I would say just definitely go with the Roth. And, gosh, your appetites may increase when you're able to have more of that free time. So, yeah, I definitely don't want to count on the tax rate going down, especially seeing how our national debt has gone up.
Well, and the other thing is inflation.
Yeah.
We're like at a 10% inflation rate right now. They don't like to show that because they take out all the inflation things. So food's no longer part of the, I guess, the GNP or whatever they use, food and
Right.
utilities, which means that your electric, your gas have also gone up, which mine has. Food is like triple the price. So they take them out because they want to make it look good. Well, that's not what their job is. Their job is to let us know what we need to stay ahead of. And if we're at 3%, which is what they like to show at 3.5%, 4%, then you need to be in like 8% returns so you can beat that, right? Because you're going to have to pay taxes on it if you have it in your regular savings account. So you need to stay ahead of that. And 10%, I know we'll get down from there, but it's been really, really tough this year. And I'm in California, so we're paying 442 or 445 for gasoline right now. I am, but if I drive over to the west side, they're paying like 5.25. They're
Oh, yeah.
paying like 75 cents more than a gallon than we're paying over on the east side of Pasadena, which, it costs more over there, so they charge more over there like
Hmm.
that. So those are the other things. You have to look at your own economy and what it's doing. And people leave California to go pay less somewhere else, and then they go to a place like Texas or I think it's Tennessee or Kentucky or places that don't have any personal income tax or state income tax, and then they get the shock of, oh, they collected through property taxes. So are they really better off? People don't do their due diligence before they make a change, right?
Yeah, very true. The government always gets it one way or the other. 100% with you on that. Uh, so what about infinite banking? So this is one I hear a lot of people talking about, but not everybody in investing does it. A lot of people do, many don't. Can you tell us about infinite banking? Have you actually been using that personally?
I did not know about infinite baking until a couple of years ago when it started
Mhm.
coming out more and more, and I'm a little over the age where they'll accept me. Well, we talk about money at 3, but if you, when your children are born, which will be in your case, your grandchildren, you could start an account for them on the day they're born. You could overfund. Possibly, I don't know enough about it, but you know several people, and I can always have you meet 3 or 4 different people. So if you think about this, you start at 0 age and you put in, we'll say $200 a month, $2,400 a year for them. You start the infinite banking for your brand new child by the time they're 18, and you teach them how to use that money and invest it in higher things. They can now pay for their own college, for instance, because they've invested that money and it's built and doubled and tripled over their 18 years. The other thing is when they get old enough, let's say 4 or 5 years old, you can now hire them to work for you, and they could put in whatever the going rate is for their Roth IRA, and they could be putting money into the Roth IRA. They have to earn enough to pay the taxes. So now they've got now money from the infinite banking and future money from the Roth account. So they've got money, and they could also be doing a 529 or a Coverdale and to pay for education, but I don't think they need that if they've got the infinity banking and the Roth account. And as a parent, you could teach them how to borrow against that and invest it. And you've got kids that are millionaires by the time they're 30. If you're a millionaire by the time you're 30, you can pretty much do anything you want. You can contribute. You can be like in Rotary and do good for your community. I don't know, there's a million things you can do, just a million things. And I like college for kids simply because it builds relationships. It may not be the greatest education in the world, but you build lifetime relationships out of your college because you've now become an adult, right? You're not going through the kid thing anymore. Your attitude shifts and you make lifetime. I have one of my friends is coming to visit me. She lives in Minnesota. We went to college together and we're going to spend 10 days together. So it's going to be a lot of fun. Lifetime relationships are so important. Like
Yeah,
that.
very true. Very true. So let's get back to some of the investing that you're doing. I know that through the Nest Egg Builders, you essentially, how does this work? Is this a fund that you've got that you,
No, we never touch money.
okay.
The sponsors, the multifamily or self-storage or resort or whatever happens to be, contact us, and then we do our due
Mhm,
diligence on them, the vetting, and then on each
mhm.
of their, we do separate. We don't really work in funds, although there's probably some good funds out there. And then we vet each deal. We look at making sure that they're doing what they say. And I can tell
Mhm.
you, even though I've worked with some for years, there's always a question that's like, when does that cash flow start? You're telling me this is a cash flow deal, and then you're telling me you're adding value. So no cash flow for a year and a half. Oh, so that might not work for a cash flow person. Okay, so sorry, I went off a little bit.
No, that's perfect because you got to make sure that the deal makes sense for you. There could be
Well, and for
two,
our investors,
yeah,
yeah,
right. And for your investors, two equally good deals. But if it doesn't help you reach your goals, right?
yeah,
You need the money now or you don't need it until later.
exactly. And we have people that don't need their money till later, and I still like to do growth. I'm in some nice growth products right now, and I'm also looking at cash flow. So when you get to be a certain age, you want to do some of each, or maybe you just want to go into cash flow. And I've got people that actually want cash flow because they changed jobs, when the economy changed several years ago, and they were just looking for cash flow products, and we put them in cash flow products. Just have to hope it stays in cash flow because we went through this really bad time called COVID and it really hurt a lot of businesses. So, but
Yeah,
that won't happen
awesome.
for another 100 years.
So, you've got a lot of things in here like experience of the team, team integrity. You talked earlier about the importance of meeting the team. We did just talk about making sure that it's whatever this investment opportunity is, make sure that it is matching your goals and helping you to reach those goals. But you also mentioned that you got a due diligence checklist of about 80 items. So, can you share any other items that are on that checklist? Maybe some things that other people maybe don't look for, but perhaps they should.
Actually, I'll give you one of the biggest ones of why people lost money over the last 3 years. The question to ask is this a fixed rate or an adjustable rate mortgage you're going
Mhm.
into and for how long is it? That's two questions. Is it fixed rate for 25 years? Is it like a 5 year interest only and then it adjusts to, because it's a 25-year loan and you have principal you have to pay? A lot of these young people went into a 1 year interest only, which you never go into a 1 year ever, 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 ever. You never go into a 1 year loan because you never know what's going to happen at the end of that year. And it usually takes much longer to get into the deal to figure out what it really needs and how it's going to cash flow, et cetera. So that's two questions you ask.
Right, I love it. Yes, and that exit strategy or even the bridge to the next strategy, whether it's a bridge loan or whatever,
Mm-hmm.
yes, things always take longer than expected. A
Mm-hmm.
2-year loan term, well, you mentioned 1 year, but even a 2-year, it sounds like a lot of time, doesn't it? But when things go wrong and you get delayed by the city, and then workers don't show up to the job, 100 reasons why that 2-year timeline, which it may seem like, hey, 6 months, 12 months, 18 months, and then you find out, no, nothing of the sort.
Yeah, 5 year interest only, and you get the 25-year loan for commercial, 25-year loan. And the first 5 years are interest only, which is good for you to be adding value. But then you've got to make sure at the end of 5 years, you've got enough cash flow that's going to cover the principal. And a lot of them don't do that because they expect to sell at the end of 5 years. Well, guess what? When you have the interest rate, you're paying 3.5% and the interest rate jumped to 5% or 7%, and you think you're going to sell it? Nope, you're stuck with it. See, young people don't really look at everything that needs to be looked at to,
Right. And more than being young, it's about experience. If you've lived through
yeah,
some market cycles, you'll see people get caught out for everything. The adjustable rates you mentioned, having too short of a loan term, and not having a plan to get out of it, or I should say, rather, a backup plan. Everybody has a plan. Plans are indispensable, but even when plans are useless, right? So, I mean, having multiple exit strategies, being able to pivot, or having a, I should say, demonstrated ability to make pivots in difficult situations. How have they ridden out having appropriate reserves? And I like to say, not just reserves within the company or the LLC, but reserves outside. I want to know that these are people that have significant financial wherewithal, because when things go wrong, I don't want somebody who's going to come to the passive investors immediately and say, hey, we've got a capital call.
right? Exactly. Yeah, we have a sponsor that's really good about that. He raises a lot for his reserves because like he's got the experience. You never know what's going to happen.
Right,
And if you have a vacant property or close to vacant, you want to make sure because you don't know that you're going to get it filled up in a year. I mean,
right.
these people that came on the other day talked about they had an 8 unit. Well, it took them 1 month to get after they got it cleaned up, fixed up. Oh, it took them 1 month to get it filled up. But if you're in 100 unit and you've got 20, it might take a whole year to get that filled up. But you should be running, I mean, the other thing is, are they really making their profit going in? That's a big question for me because if you can't run your properties at a 60% occupied,
Right.
and
That
you're
break even
not making
ratio
your,
is a
yeah,
huge,
yeah, you're
huge,
not making your
hugely good to
profit.
know.
Yeah,
Yeah,
you're not making a profit going in. And these guys aren't doing that. And I just talked to somebody that said, oh, we're doing distressed. We're buying
right.
distressed property. And then they said, well, we're giving you a 7% cash flow. And I'm like, well, that's not distressed. If you're getting a distressed property, I should be getting that distressed income. I expect to have somewhere between a 9 and 12 cap coming in to me if you're buying distressed. So I don't think they're buying distressed.
Yeah, a lot of people got caught in the deal heat, as we like to say in private
Oh, yeah,
equity.
did they?
Hmm. Hmm.
Well, we'll get through it. We always get through it. And I mean, somebody talked today about how terrible everything is. And it's like, no, you make the deal. There's people out there every day knocking on doors, making the deal because they know. I have a friend that wrote a book, well, a couple of them. There's 100 different ways to get into property. People always think of cash to new loan. So I was talking to a fella today who's a builder and he's building in South Florida and he says he can't get the property sold. So I said, "Well, are you willing to carry back?" And he goes, "Like owner carry back?" I go, "Yeah." I said, "Well, what if I said you're a builder. What if I brought to you properties? I've got like 11 lots. I could bring in 11 lots. Would that 11 lots give me a good down payment on that property? And then I could buy the property." He said,
Hmm.
I said, "Would you take those? You're a developer and you want to build." He said, "I never thought of that." Yeah,
I
most
like
people
it.
don't investigate as to what kind of opportunities. Think of this. What if you didn't have the cash, but you owned a whole bunch of notes?
Right,
You could be giving the cash flow on those notes to
right.
pay like for the down payment or to pay the whole thing. But nobody thinks about that. And
Well,
even
what is,
if you
yeah,
don't own any notes, you could create a note. People don't think about that. There's just so many things that's what I love about real estate is there's so many things you can do in real estate and people
mhm.
don't think about that. All they think is cash.
Yeah, a lot of that I think is driven by gurus. People find one guru, each guru will tell you this is the way to do it because it's the way they did it.
Oh yeah.
And then they get this idea that that's the only way to go. And even if it's the best way to go now, I always like to remind people, situations change. Whatever the best asset class is in 2025 probably will not be the best asset class in 2026. So I
Hmm.
would love to hear what are some of the asset classes that you're moving towards today, and maybe some of the asset classes that you're moving away from?
Mm, I think I'd like to get into shopping centers. I know people think that shopping centers aren't working anymore, but you know what? People go out and shop. I like the little, what I call little, the small, if it has like a grocery store and then it's got 15 or so doors, people
Right,
go
you're talking
grocery
about the
shopping.
anchor tenant there. So the
The
grocery
anchor
store in that
tenant.
case, that's your anchor tenant that brings the foot traffic that helps the others.
Right, and you can order your food online, but it gets delivered. So you need somebody local. You cannot go to Amazon and get your hair cut. You cannot go on Amazon and get your nails done. There are things you cannot do online. You need to go walk over or go to the store. I mean, I don't know anybody that's ordered from Amazon a cup of coffee online, which is why Starbucks is doing so well and
Mhm.
Seattle and all this. I just got back from Europe. My God, the coffee places are packed there too. People go out for coffee, and you can't do that online. You can order it ahead so you can pick it up, but thank goodness for things like that. You don't have to stand in line. But if you want to eat, you're going to go to a local, right? So I like shopping centers like that. I know dry cleaners aren't doing as well as they used to, but you go to the bank, you get your hair done, you get your nails done.
Yeah,
You,
100%. There are a lot of things that's just not going away.
yeah,
Anything that's a little bit more specialty, like for example, today I had to find the right boat parts. And
mm,
the reality is I'm just not going to trust any online source for that. I can match up the part number,
right.
but I just want to make sure that I've got absolutely the right thing. And I know I can pick it up locally right by my boat. There's just no reason, no reason. So yeah, I think you're right. The death of retail has been greatly exaggerated and could be the time to swoop in and get some good deals. So, what we need to do is, I think, really look for those opportunities. And I can't say now's the time to swoop in. We don't know what the market cycle is going to look like, but some of these distressed assets, or I shouldn't say distressed for retail, but again, people are just predicting the end of. Yeah, I go out and buy things all the time.
Right, exactly. So there's that. And multifamily's not going to go anywhere. It's still going to be
Right,
around. It'll get through the distressed and it will recover. We'll recover in everything. I don't know that we'll recover in office. I doubt it's going to go back the way it was because there's
right.
new ways of doing. And look, here's the other thing. We have a lot of people that got laid off. I think we have a lot more people that are getting laid off. Those people will become creative. They'll start new businesses. They'll create new items. We're not a society that sits back on our tails and waits. We are a society that moves forward. One door
Yeah,
closes, another door opens. And
yeah,
because we are a societal, we stay in touch with people, we build relationships. There's people that talk to each other and say, gee, have you ever thought about this? Or have you ever thought about that? I mean, the other thing I don't think is going to go anywhere or is what I like are self-storage. I really like self-storage. And we
Do you
know
think it's
people,
overbuilt? I mean, at least in some areas, I think it's
maybe
clearly
in some
overbuilt.
areas that we
Yeah,
know people that are going
right.
into areas that where it's not overbuilt. And then you have to look at
Yeah,
where is the population moving. And then
right.
you do have the millenniums who are like they don't like to own anything anyway. So
Right.
what we haven't seen that really affected a lot so far like
Right,
that.
makes sense. And I just one of the things I like about the podcast, I get to hear fresh perspectives. I can't know as much about self-storage as an operator, and just had an
Exactly.
operator who said, hey, yeah, it's overbuilt in some areas, but we go for the tertiary markets. Bingo.
Right.
Just love to hear that. Always a fresh perspective. In fact, even in multifamily, like the tertiary markets, because the people have just been hammering on this for years. And with those low interest rates, a lot of those apartments have turned over a couple times, three times maybe since 2000, I should say, or more.
Mm.
So
Yeah.
there are very far fewer that are mom and pop operators owned. That is at least to say in the primary markets. But yeah, those tertiary markets, I'm still finding that there are all kinds of very interesting deals.
Yes, there are.
Yeah.
That they are. Yeah, so I'm not looking into farms.
Okay. Now
Agriculture
that's an
is
interesting.
a
Why
whole
not?
different
Because
thing.
I know farms are just perennially favorites among the ultra wealthy.
Yes. Yes, well, and I have a friend that's just they're getting ready to release their third movie, but they would kiss the ground and common ground and teaching farmers how to stop global warming, actually. The farmers are the ones that cause the global warming, actually, if you ever watch Kiss the Ground. Anyway, but I'm not in a great variety because office, I was invested in office, but restaurants are a really good place. And the other thing is looking into businesses. Businesses are going to change. AI is going to change everything for all of us. So if you lose your job, if somebody loses their job, for instance, but they've got their money coming and they've got their IRAs and Roth that they can then move into their self-directed Roth IRAs, they can start investing with businesses by offering some way to support them, like do the marketing for them and show them how they can make them grow. When you think about the people that are being released from the businesses that they've been in, and they've got all this knowledge, they could take that knowledge and help businesses grow and get a cash flow out of that every month. I don't know if anybody thinks about that, but I started actually one of my mentors, my mastermind leader, that's what he's doing. He's going in and finding businesses that want to grow. They thought they wanted to sell. And he's like, look, if I show you how you can make more money, would you like to do that? And then in the next 3 years, sell in the next 3 years. And there's a whole group of people that have gone into that. So I think that that's going to really expand, but that's buying into business. And what my question would be when I'm buying into a business is, do you own the real estate? And if you
Mhm.
own the real estate, is that real estate separate from the business? Because you get better tax advantages by having the real estate in a separate LLC and the business in a separate LLC, right? Because the business now can write off the whole lease, whereas before they couldn't write that off because they owned it all. Anyway, that's another thing. And then that also opens another door for a 1031 exchange, which I love 1031 exchanges for people that want to go passive because almost all of our sponsors will work with 1031 people and we have
Right.
some DS.
DSTs, yes, very important. Awesome advanced strategies. Well, anyway, I'm afraid we're going to have to wrap. We're getting towards the top of the hour
Yeah,
again.
you and I could talk forever, right?
I know, and hopefully we will catch up again because I always love to talk to you. You've always got some amazing and great things. So let's see. Actually, I don't think we really had much time to talk about your show, but I'll just deliver a personal endorsement. You've always got some great speakers every week. And I've spoken there, as you mentioned, and I've been a participant, a viewer many, many times, but really appreciate what you're doing. You always have great speakers out there. But I think what I'd like to do right now is head into our lightning round, the ultimate set. Are you ready?
Oh, I guess so. I didn't
All
know
right.
about this. So what is it?
All right, Peggy, if you could be known for only one thing, what would that be?
My generosity and sharing my information, talking about real estate.
I love it. Very positive. And I know your other book is Choose Happy. I can't wait to read that one. What is one mistake that has taught you the most?
Be very careful about the sponsors we work with. Make sure I do the due diligence, do the referrals, references, like that.
What personal characteristics have been most pivotal to your success?
To my success, what characteristic? I, perseverance.
Yeah,
I
huge.
I never
All right, here.
stop.
Let's lighten it up. I've got some random questions. So they're probably going to be something really
Right
silly.
there.
Just tell me when
That'll
to
do.
stop cutting the deck.
What's that one?
Okay, we'll find out. Okay, if you knew you wouldn't, oh, I hate it when I get one that I've already read on air before. If you knew you wouldn't get hurt, would you rather skydive or view sharks from an underwater cage? We got to do
Pick
something I
another
haven't
one.
done before. In which activity would you like a lesson from an expert?
Oh, what lesson would I like? Ooh, well, you can't go backwards. Um, how to really 10x in a fair amount of time,
Okay.
right?
What are you trying to 10x right now?
How do you, well, I've started the book. I'd like to see 1 million of those sold this year, but
Yeah, I want to 100x my sales. Can you help me there?
right. And we've started the ultimate investment protection system, teaching people how to do their due diligence, creating a
Mhm.
list, not with necessarily 80 checkpoints on it, so that they can, and then we also go over all a few deals so that they can see what it would be that they would get. So they have knowledge. Knowledge is the best move you forward that I know. I think that that's why I did this book. I think if you have more knowledge, you're not going to be homeless. You'll know how to pick up your bootstraps and move forward.
Love it. Nobody can take that away, even the markets. You've always got
Yep.
the knowledge. So, can you give us a tip or trick that investors can implement in their business today?
Ask the right questions.
Mhm.
Make sure you're making your profit going in. Know what it is to make your profit going in, not thinking that, oh, I can make a profit on this, but most all the educators now are teaching you how to
Right.
push something to make a profit, but you have got to make your profit going in. You've got to be,
100% love that. That's beautiful. If everybody did that, there'd be a whole lot less failures.
oh,
Can
no
you give us a
kidding.
book? Can you give us a book recommendation? What's one book that every investor should read?
Oh, well, the standard Napoleon. Well, I got about a half a dozen, but
Yeah.
Napoleon Hill's Think and Grow Rich. I like what is it? The Next Door.
Oh, Millionaire Next Door. You're talking about Thomas. I
Millionaire
forget his
Next Door.
last
I
name.
love the Millionaire Next Door
Yeah.
because it teaches us that most millionaires aren't living in a big castle. They're living in the
Right.
same house that they
Yeah.
raised.
Thomas Stanley, PhD, I believe. Yeah. I mean, 100%. I've seen it. I've lived it. I know so many people that are like that. I'm wearing my oldest shirts that my wife and my mom both tell me I'd better throw out to go out to the store because I'm working, right? Well, that was the other advice I got from my mom. Actually, comes from my grandfather, maternal grandfather. I'd say never be ashamed to look like you've been working. So when she tells me, "Why did you throw that shirt out?" What would my grandfather have said?
So here's one
I'm
more.
working today.
If I could throw this out, because you just brought up your grandparents, ask your grandparents what you should know about making yourself successful in life, because they've been through it all.
Love it.
They can see from the past, can see into the future because they've been through it, right? We grew up in the 50s and 60s and 70s
Mhm.
and 80s and 90s and 100 and 110 and 120. We have a lot to go back and look at to see, my God, the world has moved so fast, so fast. It's moved money wise, it's moved, we're using AI now,
Yeah,
the
huge.
brick, all the phones that we've gone through, plus the morals. They were so crappy, excuse me, when we were kids growing up. That's changed so much.
Hmm.
People are in such a better position without being judged or totally. You get to think for yourself. You get to make your own decisions. We didn't get to do that. You did what you were told. How
Hmm.
high can I jump? You were told that, or there was a consequence. That
Right.
isn't so well, I can't say it's not so anymore. I know there's still some things that go on, but overall, society has opened their minds and realized you got to let people think for themselves. You got to
Yeah.
let people grow.
Nice, nice. Love it. Can you set us out with a quote to help forge our listeners as leaders and entrepreneurs?
I don't know. Let me pull one from the book.
Oh, I love it. Yeah. So this is going to be from your Choose Happy, correct?
Oh, I could pull one from Choose Happy
Yeah. Why not? Why not?
because I have those quotes after each chapter in the and
Yeah.
building nest egg. Oh, here's one. You'll love this. It's called Lick the Beaters. I don't know if you lick the beaters when you make a
I
cake.
know what you're talking about. Yep. Yep. For those of us who
Mm.
didn't bake as children, what does it mean to lick the beaters?
Well, I'll try anything once, twice if I like it, 3 times to make sure. And that's by Mae West.
I like it. Oh, yeah. She's got a lot of good ones.
Oh, and people
I think she
probably
might have
don't even
also
know
been
who
the one.
she is.
Oh, I sure do. Yeah. Wasn't she come up and see me sometime? Was that her?
Oh, you
But
betcha, baby.
all right, yeah, and here, well, that might have been her funnest quote, but was she the one who said, whenever I have two choices before me, I pick the one that's funner?
Absolutely. Well, I was talking to a young man the other day and I was asking him if he knew about Woolworths and he never heard of Woolworths.
Oh, yeah, yeah, yeah.
I was
All
asking
right.
him if he, the gal that, ran that into the ground, was married to Cary
Oh,
Grant. And he never heard of Cary Grant. I'm
Cary
like,
Grant either. Okay.
okay.
All right. Well, yeah.
Thanks for everything. This has just been so much fun. I've had a great
All right,
time.
wonderful. I don't know if we have time for one more, but I'll say going out on the boat with my kids, maybe as soon as this weekend. And yeah, they used to call those life preservers, May Wests.
Ah, yes, that's right. That's
So
right.
some of you young folks might have to go and do some internet research there. But yeah, definitely a character. Love the time we spent today, Peggy. Beautiful. Every time I get the opportunity to talk to you, I learn something new. Love your show. Definitely check it out. Nest Egg Builders. Just want to make sure everybody can reach you. What's the best way to reach Peggy Beauregard?
Ah, LinkedIn.
All right, love it. Beautiful. Well, thank you so much for taking the time to share your knowledge and experience with our audience.
Thank you so much, George. It's been so much fun.